Your broker sends both you and the IRS a form called a 1099. 1099s tell the IRS about any income you should be reporting. The IRS compares it with your club tax return to make sure you haven't left anything off or reported anything incorrectly. There are several types of 1099s. The most common ones a club will receive are a 1099 DIV for dividends, a 1099 INT for interest, a 1099B that shows stock sales. Within the last 2 years, there's been significant changes to the Form 1099B. Brokers now need to report certain capital gains amounts to the IRS. In the past, all that was reported was the total proceeds from your stock sales. The IRS had no way to know that you were reporting the correct taxable gains and losses on those sales. With the extra information, they can now double-check what you report. It includes adjusted cost basis, any non-deductible loss due to wash sales, and whether a gain or loss is long or short term. The form you get might look like this, or it might have all this information in a different format, but it will still be called a 1099B. Here's an example of what your 1099B might look like. You'll see there's a lot of information. First, your broker will probably separate short-term gains and losses from long-term gains and losses. Then, within each category, they will be sending capital gain information to the IRS for what are called covered securities. These are the sales which are covered by the new tax reporting requirements. They might provide you with the same information about non-covered securities. The information on this form needs to agree with the information on your tax forms, or you need to have a valid reason why the broker's information is incorrect. The information gets reported on your club tax return on a form which was new last year called Form 8949. As part of your tax prep process, you'll be doing a Schedule D review where you'll be comparing what bivio will report and what is shown on your 1099. If you've been checking and correcting your sales during the year, you shouldn't have any surprises when you come to this step in your tax prep. We did an entire presentation on the new cost basis reporting. You can find a link to it on our help page. I strongly recommend you review it to determine what you need to know now to make sure you won't have any reporting issues at tax time. Along with cost basis, there may be other records changes you'll need to make that you won't know about until you get your 1099. If you've done a club audit, most of the numbers on your 1099 will quickly line up with what you show in your records, but you might still have these things to address. There might be slight changes to make sure qualified dividends are being correctly reported, especially if you own mutual funds. Some mutual fund dividends are qualified and others are not. If you have had distributions from mutual funds and REITs, and even from some stocks, some of the distribution amounts may need to be reclassified. If their distributions are not really dividends, but are a return of capital or a long-term capital gain, you'll have to go back and manually split up each dividend distribution you've received during the year. You may find this information on the company investor relations pages near the end of the year. If not, you won't know what changes to make until the information is reported to you on the 1099. You may need to change the dates on interest or dividend income originally recorded as received early in the new year to a date late in the tax year. It will depend on the year your broker has reported the income received. If you've been keeping your club cash in a money market fund at your broker, they may have classified your earnings as dividends rather than interest. This is okay, you just need to make sure that your bivio records record the income in the same way. If you've recorded the earnings as interest, you'll have to edit the transactions and call them dividends.